Okay, what I'm trying to do in this video is to try and answer some of the questions asked by someone who wants to know more about the markets and know more about how I approach things. These are some of the basic questions, but obviously there is a lot to learn from the answers that can be given to these questions. Usually these questions are not answered anywhere specifically, and even if they are answered, they are not answered in a way that can make a lot of sense. So the first question is, when we say big institution, big money or market maker, so is this a single group who controls the entire world market or different groups? And if they are different companies or person, they might think differently. So do they fight with each others or they always take same kind of trades? We hear that small retailers have fight with big smart money. So first and foremost, what is like big money, alright? What I like to call it is smart money. So smart money has some attributes. So anyone who can be called smart has a better know how, better know what, better know when, and one more factor, and that is deep pockets, as I like to call them. That is, they have huge sums of money. So what do I mean by better know how? Is that they are overall better at trading than you are. They know how to trade well, they know how to enter at the right times, how to manage their positions, everything. Like they are just better at trading than you are. Then they have better know what. So what happens is, by the time any news or piece of information is reaching you, it is already too late. The information dissemination or distribution, as we call it, is controlled. So it is controlled and it's not reaching you in time. Obviously it is purposefully made so that you don't get it in time. But these guys, they know what is important, what is going to affect the markets, and they know well in advance of other people. And then they have better know when, like they have a sense of timing. Also, you need to understand that since their pockets are deep and they trade with huge position size, usually their actions is what will create trades. Their actions will what will create imbalances in the market, and that will move the market. So they have better know how, what, and when. And then they have deep pockets. So people believe that if you know how to trade, if you know what information you should look at, if you know when to enter and exit, you will be able to trade better than most of these smart traders or big institutions. No. Because they simply can steamroll you. So what do I mean by that is, if they have like huge position size and they decide to break a level which is probably a support or a resistance for you, and you are blindly believing in that support or resistance, and they just use their huge capital to break it through. They use hedging strategy so that even if things go wrong, they are not hurt too much. So all in all, they can utilize this big capital to their benefit and avoid getting trapped into bad situations. And most of the times, like however bad the situation gets, they will either come out with small losses or maybe some profits only. So that is what smart money is. Are they just one entity or different people? Obviously they are different people. Now let's say you start your journey as a trader here at the lowest level, probably looking at news or indicators. That is how I started. And then you slowly move up and finally reach a stage where probably you're using some advanced technical tools, but not only using advanced tools, but you can understand them well. It's not just about the tools, it's how you interpret the markets using those tools. That is more important. So you can do that as well. So you have become a good trader. So this is a journey. And it's same for everyone. Like institutions also, they have their processes, they have their information collection methods, everything. Like it's not one person. It is the whole system that and huge capital to bet on their trade ideas. It's the whole system, that we are trying to fight against. And it's not one. And it's like every institution, every smart money, it started somewhere lower and then they reached a higher level or even much higher level than us. So there are multiple smart money people. Not only that, they are trading in all time frames. So there are smart money investors, there are smart money traders who can do, let's say, swing trading for you or intraday trading. They can do everything. There are high frequency traders, firms which employ high frequency trading techniques. They're also smart money, and they're also taking a big chunk out of market profit. So you need to understand, like, they are everywhere, but they are in a minority. They definitely, although they have controlling power because of huge capital, they're still small in numbers. That is one question. Then, if they are different, your next question is, do they fight with each other? Do they trade with each other? And obviously they do trade with each other. Not only, like, smart money investors will trade against smart money investors too. They will trade against smart money traders too. Investors may trade against high frequency trading when they are trying to establish their positions. Intraday traders usually they'll find crossing paths with these guys. Swing traders, intraday traders will cross path. Sometimes swing traders and investment traders probably are trying to exit a stock at the same time, and that can result in a sharp move. So these guys are trading with each other all the time. And not only smart money, amateur money as well. So you need to understand, like, there are smart investors, there are amateur investors. There are smart traders, there are amateur traders. There are smart HFT, and there might be not so good HFT. So what is happening is, it's not just different time frames that are interacting with each other. It is also smart people and amateur traders within those time frames that are interacting with each other. So it is like it's a whole mess, right? It's not pretty. It's not clean. It cannot be clearly differentiated. Like, okay, this particular order is by this one and this particular order is by this one. You cannot do that. Okay, don't even try to do that. Okay, so do they fight with each other? Absolutely, they fight with each other. And do they always take same kind of trades? They would like to, they would try to, because let's say, market has gone higher and it is at a very high level and expected to fall. So obviously all the smart traders would like to exit their longs here. So either they are exiting longs or they are entering shorts. So if they enter shorts, they'll profit. If they exit long, they'll make money on their initial long positions. Make sense? So yeah, they would like to try and trade in the same direction to take the trades that are best suited to the current market situation. So yes, they will do that many of the times. You have also said that we hear that small retailers fight with big smart money. You need to understand, it's not always small retailers that are fighting against big smart money. It is usually the herds that are being culled by predators. Is not a very pretty analogy, but yes, herds are controlled by so many different groups. So politicians, business interests, media is new monster, social media. Everyone is trying to control you, right? They are trying to control you. How do they control you? They control you by controlling the flow of information. What information is reaching you? When is it reaching you? And how detailed is the information? How true is the information? So all this will lead to some biases forming in your mind, and you would like to trade that. And because human emotions have not changed over thousands of years, they're still the same. Fear, greed, all those emotions, they're still there. So what these predators or smart traders have done is they have analyzed the behavior of human beings as a part of a big group. They behave differently in groups and individually. So now they have studied their behavior. They have come up with some ideas that, okay, if such and such situation is happening in the market, retail traders are expected to behave in a such similar in some way. Smart traders are expected to behave in some way. In smart traders also, if someone is an investor, long-term trader, he might behave in a certain way, and someone is a short-term trader, he might behave in a different way. So all these analysis they have done, and based on that, what they will try to do is they would try to always grab liquidity. So what do I mean by that? Let's say market is going higher. This is a top, market has fallen down, right? And now what is happening is, no one knows where a top is forming. Even the smart money do not know when the top is forming. But once the top has formed, all right, what retail traders will look at, no one knows this is a top. But since smart money has more information, more understanding, they probably have some idea that, okay, this might be a top. But retail traders, they are told to trade with the trend. I also trade with the trend, but obviously you need to understand the difference, when to and when not to. So this particular fall is looked as a pullback, and it is now expected to go back up. Where is it going back up? For a retail trader, it is going to the moon. Okay, it is going higher only. But for a smart trader, he is not worried about the moon. He is not worried about whether Nifty is going to 50,000, 1 lakh. No, he is worried about the nearest reference. So this is the top. So when the smart traders, they are trying to see or trying to observe what the market is doing, they will look at these references. Now most of the retail traders will try to buy a breakout, and the smart money will observe the market action in this area. And if they believe that this is all retail traders and other big traders, smart traders are not joining in, they will fade this breakout and it will result in a big fall. So what has happened here? These breakout buyers, they are buying here. What is the other side of a buy trade? Okay, if someone is buying, the other side is obviously sell. So when the retail is buying, who is selling to them? It is the smart money. So what they do is they will use this additional excess liquidity. Suddenly market is making new highs everywhere on the news. It is flashing and people are getting alerts on their phone. Everything is good. Some good economic announcement comes in and overall the mood is good. Retail traders are buying, and if they are buying, smart money probably are selling to them depending on the situation. And then then the retail traders will worry what happened. Then the market will fall sharply. Then they will be advised that you are in for the long term. You are an investor. You don't try to time the markets and everything. But in the meanwhile, a lot of wealth is transferred from retail traders to the smart money, and that is how the game continues. So yeah, most of the times retail traders might be trading against the smart money in different time frames. So if this is a multi-month top, this is retail investors trading against smart money investors who are trying to get out of their positions. All right. If it is an intraday top, maybe intraday smart money is trying to sell and intraday retail money is trying to buy. So all these kinds of permutation combinations are possible. This is how it works in the markets. I hope it makes sense to you, at least for the first question. Let us look at the second question. Second question, you say that when we say market is supreme, what does it mean? Does it mean that nobody can have the complete understanding of the market? And if we say that we cannot have complete understanding of the market, then you are asking what is it particularly that we are not able to understand, that we should try to learn, or we can never learn. So there is something you need to understand, is that if I give you a dice has 6 sides, there are 1 to 6 numbers written on it, and if I ask you what is the chance of getting 4, so you will tell me that okay, there are 6 sides, 6 possible outcomes, and 4 only comes once. So this 4 has to be removed from here. So the 4 will happen only once. So the probability is 1 by 6. If I ask you what is the probability of an even number, so there are 3 even numbers, 2, 4 and 6. So it will be 3 outcomes that are favorable to you divided by total 6. So this will be your probability for getting an even number. Make sense? Now what is happening is, you know that there is a dice, there are 6 sides and there are only 6 possible outcomes. Here we are trying to calculate known unknowns. What does that mean is, you know that there are total possible 6 outcomes, but you don't know which is going to come out. So you are trying to calculate the probability. But now consider a situation where you really don't know how many outcomes there are. What are all the possibilities if you don't know? Let's say if I tell you that I have a bag, and inside that there are, I don't know how many number of dices. Then I don't know like what numbers are written on them. Then I don't know whether all are same or all are different, right? It's not like 1 to 6 only on each dice. It can be any number. So it's a completely random situation. And then I ask you, like, what if I pull out a dice and I throw it? What is the chance that you will get 27 number on the top? Now you don't even know whether 27 is written on any of the dice or not. So what is happening is, you have a lot of unknowns. So we are now dealing with unknown unknowns. One is, we don't know the total possible outcomes, and we don't know what could be the combination that could be favorable to us. We only know that we want 27 number, but there are so many unknowns, we simply cannot calculate the probabilities. This scenario is called as unknown unknowns. And when you are dealing with unknown unknowns, you basically don't know what is going to happen, what is likely to happen, you have no idea. Now, when you are talking about what are those things that we don't know, that we should learn, it is an unknown territory. You really don't know what you need to learn so that you can become the the best trader or the perfect trader, alright, or even if any such thing exists. So when we say market is supreme, what we are trying to say here is that market is not any one individual, it is a collective. What does that mean? It is a collection of millions of traders, their emotions, their present states, alright. So I am happy today, I might not be happy in the evening. I may be extremely happy tomorrow morning and I may be extremely sad tomorrow evening. I may be angry, I may be frustrated, I may be sick, I may be healthy. All this is going to affect your emotions at any given point in time, right? And I have given you just small number of possibilities. There are unlimited number of possibilities. Combine unlimited number of possibilities with unlimited number of traders and you get impossibility that you can predict what the collective might be, thinking at any point in time. So when you are trying to predict, it becomes impossible. But when you are trying to assess, what happens, let's say market makes a new high and comes back down and it goes back to that new high again. Now you have a new high. There is a trend. This is a pullback and this is a revisit. Now it can be either a breakout or a failed auction, or it fails and falls down. So there are a few possibilities, or it just stays here and consolidates. There are multiple possibilities. Let's say these three are the most likely you have observed or people have observed. So what happens, no matter what the collective is thinking that day, no matter how sad I am, if I see a possibility here and if I believe this is going to be a failed auction, market is going to fall, no matter what I am thinking, I will try to short. Or if I believe that I am long but I am very frustrated with something, but still, like if it's an opportunity, I will try to buy. So the market will align itself based on the information that is presented to them. Most of the retail traders, they are trying to trade through charts, and people who are trying to trade through charts will be affected by charts. People who are trading through, say, a news channel, business news channel, they will be affected by the news presented there. So this all will kind of always align itself in a way to direct the herd of retail traders. So what happens, even if you are a very smart trader, very good trader, but you really don't know, like if you are smart trader 1, you don't know what smart trader 2 is thinking. You may have a fair idea, like what he might be thinking, but if he is in opposition to you, and you lock horns at important, junctions here, and then suddenly there is a smart money 3, there is a smart money 4, and these all join forces or have the similar opinion like smart money 2, and they are completely opposed to you. If you wanted to short, it won't work, market will break out. So you are not really bothered about retail traders, but you are bothered about other smart money. So overall, all the smart traders, amateur traders, everything combined makes the market. It is impossible to really get ahead of the market because of all these different ways of thinking about markets, constant flow of information, everything, and we really don't know how we are going to react to a particular piece of information. So what is the solution? Solution is simple. Instead of trying to predict, try to assess what the market is trying to do. Instead of trying to predict where the market will go, try to understand what is the current risk in the market. So whether it is risky to be long or whether it is risky to be short. So it's just another way to look at markets, which I share in my courses. So you need to look at these things, and that will keep you maybe one and a half step behind the markets. But the probability of your trades working out or the probability of staying out of bad trades will go higher dramatically. So your mistakes will go down, your wrong trades will go down, and you will most probably be taking good trades, lesser number of trades, but good trades. Alright? Or even if you make a mistake, you will be able to catch yourself early and not let that mistake destroy your trading account or your trading career, as so to speak. Alright? So that is what I believe. It's impossible to get complete understanding. Don't even try that. But if you are okay to walk one and a half step behind the markets, you will be led in the right direction always, and you will be able to exploit that to your benefit. Third question is, and if suppose being perfect in the market is possible, then what are those things that are required to be perfect in the market? It's not possible. The only person who's perfect in the market is a person who is delusional, who has fooled himself that he can understand the markets completely. He can predict the markets completely. He can always take profitable trades. Such a person is a delusional person, and there is no shortage of such people on the social media, right? So you can make a cursory search about stock markets and you will get so many names. They are completely delusional. I don't know what they are thinking, but it is impossible to get ahead of the markets. You can follow the markets and you can be very profitable over the long run, trying to be perfect, trying to take always the best trades is impossible. Fourth question is how the big institution smart money works. Now this question you are trying to ask, like how the FIS, DIS and all these big traders they work, how they function, what are the factors they are considering, and I will be very very honest with you and say I don't know, because I am not a FI or a DI, I am a retail trader. Now how do I approach this situation? I don't know what FI is doing. I don't know what DIs are thinking. Alright. So how do I deal with it? I simply look at the market generated information. So if market is going higher, it is making a top, comes back down, breaks out and continues to move higher, I'll observe the quality of the move here, everywhere. I am observing what the market is trying to do right now. And I'm also trying to ask the question, how good a job is it doing? So if it is trying to break out and I see that market is not doing a good job, it is struggling, it is getting tired. Now there are ways you can find those things out objectively, not subjectively, objectively. So if you can find those things out, then you will know that, okay, even if this looks like a good price coverage, the breakout may not sustain, or at least you will get a deeper pullback or a sideways move. So the up move may not continue. So these kinds of informed conclusions you can draw. And then you can guide your trading actions based on that. I am focusing on market generated information. Why? Because let's say if I have some information, how are they going to benefit from that information? You can benefit from two ways. Either they sell the information or they act on it. Now, obviously FIs are not going to sell, they're not news channels, but they'll act on it. So let's say, they believe that this is the market, it's coming down, but this is the bottom, this is where it is going to stop and reverse. So what will happen? FIs will come and they'll buy here. Or if they believe that this breakout is going to sustain, what will happen? As the breakout happens, FI will support the markets. So you will see positive numbers there. You will see prices increasing after their buying. So you know that they are in sync. Simple, right? So their actions will be reflected in market developments, which you can study using market profile, or for that matter any tool if you have enough experience with it and you have the correct approach towards markets. You will be able to understand what the big traders are trying to achieve and whether their efforts are giving them results or not. And then that is how you will understand what the market is trying to do. If it is doing a good job, you follow one and a half step behind the markets, and that's it. That is all you have to do to be consistently profitable. You may not be the superstar on the Twitter who made let's say 5 crores from 5 lakhs or 5,000. But you will make consistent money, you will be able to support your family, you will be able to fulfill your own dreams. Let us move on then. So this fourth question I really don't have a clear answer to, because I don't know what they do. I don't have access to that information, and I am also not really too interested in that. Then the last question is, what are the tools or strategies used by big money? You are saying that they use market profile, volume profile, VWAP, order flow, any other tools to study. You first need to understand that they are not using all these tools. I have never said that smart money is using market profile. I have never claimed that only those traders are smart who are using market profile. No, that would be stupid of me. What I always say though is, if you use market profile, you will be able to spot smart money actions in the markets. If you use VSA, you will be able to spot smart money actions. So it is the other way around. It is not that smart money is using market profile, no. Smart money is using VSA, no. But market profile and VSA will take you to smart money actions. Their footprints are left behind on the charts, which you can study using these tools, and then you can align them yourself with their actions and make consistent profits. Right? And again, I tell you, it's not about market profile, not about VSA, not about order flow, not about VWAP, not about anything, not about volume profile, nothing. Of different groups of traders. So you need to know what smart money is doing. You need to know what amateur traders are doing. Not only that, you also need to understand what higher time frames and lower time frames are doing. So what I do is, let's say you have to first define your time frame. So if I say I am an intraday trader, alright, so my job is to buy and sell on the same day. That is my time frame. So I'll look at one higher time frame, that will be swing traders who are trying to hold positions overnight and maybe for a few days. So I'll monitor their actions. And I will also look at scalpers or HFT algorithms where they are triggering. So what will happen is, I will have one lower time frame under observation, one higher time frame under observation, and I'll make my decisions on this time frame, which is my time frame. So what will happen? I will avoid in most situations going against the higher time frame, and I will also avoid fighting with the smaller time frame, because if these guys are in huge numbers, even higher time frame will stop and take notice, and it will not fight with them. That is what smart money does. So if smart money believe that there are so many short term scalpers trading, they will not fight with them. They'll just step aside and they'll let them do their business. Once it is done, then they will come back and take their actions. So all these things come under the purview of trader behavior. So all you have to learn is to study these trader behaviors, and that is what is going to give you deeper insights into what the market is trying to do at any given point in time. And then obviously the same process repeats. You walk one step behind the markets and you make your consistent profits. So those were the questions that you wanted me to answer. I took some time. I know you asked me these questions a couple of days back, but I wanted to make a detailed video. I hope the answers I have shared with you help you. If you feel that you need more information, or you get some follow-up questions that you want me to answer, you can definitely ask me those questions and I will try to answer those also. I have one single motto when it comes to teaching and sharing my knowledge with interested traders like you, is that no question should be left behind. I want to answer each and every question. That is what I try to do. So I hope you like the answers, and I am looking forward to more questions from you.